This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. A little while back, I had Brad Rotter on my podcast. Brad was the very first investor with Richard Dennis way back in the day. He's seen it all. And Brad came on my podcast and he gave a very strong, compelling view on Bitcoin. A big supporter of Bitcoin. Later on in my podcast, I had Mark Miller. Mark, a computer scientist at Google, talked about how the technology behind Bitcoin could also be used to solve property rights issues. Terribly fascinating. Both of these men got me thinking just about Bitcoin, the technology behind Bitcoin. Recently, I was on a flight. It was either to Singapore or from Singapore, and I caught a documentary called The Rise and Rise of Bitcoin. It was okay, but it got me thinking again more about Bitcoin. Now, of course, there's been wild swings in the price of Bitcoin. It's a nascent technology, not surprising the big ups and downs, and maybe it becomes a complete failure, which is one of the things that was talked about in the Rise and Rise of Bitcoin documentary. Now, I think if there wasn't the chance for government to mess things up, there's no doubt that the technology, the idea of Bitcoin, and if not Bitcoin, some other cryptocurrency would make our lives a lot better. But there's no doubt the government has a stranglehold on things. Today, I have a two-part episode on Bitcoin, more Bitcoin. First, Andreas Antonopoulos, a Bitcoin investor, a Bitcoin defender who I first caught on the Joe Rogan podcast. And I immediately in my own head started saying, I have questions for him. I know what I want to ask him. I know what I want to get into with him. I want to go straight for that government angle. Second on the podcast today in this two-part episode is Harry Yeh. Harry is a managing partner at Binary Financial. And it took me a little while to see where Harry was going in our podcast, but ultimately Harry's fascination with Bitcoin is its tradability. I mean, I know Harry has a desire to see it work out as a currency, but I think right now Harry says, wow, this is something you can trade. You can make money off this right now. That's fascinating. And it's really interesting to see how Chinese investors are gravitating towards Bitcoin right now in 2015, going right into trading Bitcoin. Today, Andreas Antonopoulos, Harry Yeh. My prior podcast, definitely worth checking out. Mark Miller, episode 248. Brad Rotter, episode 177. All four men bring some insights to the idea of cryptocurrencies and their great usefulness for all of us. But here's my big picture as a guy who grew up in the Washington, D.C. area, as a guy who knows something about the Federal Reserve, something about state power, something about the government. And the issue that I really didn't hear you talk about on Joe's podcast was one of acceptance. What if the state feels so damn threatened by Bitcoin, and I see this as easily happening, that they just outlaw the acceptance of the damn thing?
Well, they could try.
Okay, what would stop them? What would stop them, in their infinite wisdom, the state saying, you will not be accepting this anymore. It's now illegal to accept Bitcoin. Look, 50% of Americans have no money. So if some politician comes on TV and says, hey, all these rich folks are using Bitcoin to get around the system and they make up some bullshit, state power can step in and just, boop, that's it.
No, they can't really do that. For a number of reasons. The first and most important reason is that the First Amendment actually covers financial transactions, among other things. that particular aspect of the First Amendment was recently strengthened significantly by the Citizens United decision that said that the ability to spend money on political causes, among other things, is protected under the First Amendment to such a degree that neither the states nor the federal government can impose restrictions on using money as speech. Now, it's already clear that Bitcoin is money. There have been plenty of rulings to that effect. And it's also clear that Bitcoin is already being used as a means for campaign contributions by politicians for campaign finance. And in fact, the Federal Election Commission has, in its ruling, said that politicians can accept Bitcoin. They have converted to US dollars, but they can't accept Bitcoin for their campaigns. So from one part of this is that the legal structure in the US, especially based under constitutional law, which extends to both the federal and the state governments, does not allow the state or the federal government to regulate money to such a degree as to outright ban the use of a particular form of money. Secondly, more importantly, despite or above and beyond the legal system and justice system, in the US, due process is given to those who can afford it. In the Bitcoin sphere, there are now plenty of people who can and will fight hard against those kinds of arbitrary rulings. So if, for example, a state agency or federal agency suddenly tries to pull one of these things off, not only would the law be on the side of Bitcoin, but people with deep pockets who have very significant vested interests in Bitcoin would hire an army of lawyers to enforce that law. People like Mark Andreessen of Andreessen Horowitz, who's invested significant amounts in 3 or 4 different Bitcoin companies already, but also many others behind the scenes, including people in Bitcoin who have Bitcoin fortunes, who can afford not one, not two, but thousands of lawyers for thousands of hours, and would make it very difficult. Now, finally, the third aspect of this is a fight that the government does not want to fight. It's much easier to leave Bitcoin in a sort of gray area and use administrative rulings and regulations to make it difficult than it is to go for a full frontal attack against Bitcoin in such an obvious way, in a way that can be resisted. And part of the reasoning behind that is that if they do pick up this fight, it's a full frontal assault against Bitcoin, this will very quickly, within a year or two, end up in front of the Supreme Court. When it does end up in front of the Supreme Court, there is a pretty significant chance, especially under the current Supreme Court, that they're going to lose. And that would set a very nasty precedent that they can't overcome. I think the federal government and the state governments, and this applies for governments all around the world, would probably not want to go for such a direct approach that has the risk of losing.
Okay, if they don't go for the direct approach, like I said, having grown up in the Washington, D.C. area, the non-direct approach can be just as eviscerating. So I look at Bitcoin as obvious. I want to have you on. So I mean, we're sharing the same big picture idea. This is fantastic. A currency outside of state reach, state manipulation, state control. This is just a fantastic idea. It's brilliant. But that
it's nothing new.
No, but that in of itself, though, being outside of, even though watching you on Joe Rogan, I understand the idea of digital currency this is not a new concept, but Bitcoin is taking it to a level where there's a threat. And I look at the Federal Reserve. You know what the Federal Reserve did after March of 2009. I mean, they eliminated interest income. They developed something called QE. They did everything in their power to make the U.S. stock market go up, and they did it. And so when I look at Bitcoin, I'm like, my God, is this a full frontal assault on the power of the big banks, on the power of the Federal Reserve? And it sure as hell got to be taken that way, don't you think?
No, I don't think so. I think I'd like to point out that it's not just that Bitcoin isn't new or digital currencies aren't new. The idea of non-state-owned and non-state-run currencies isn't new at all. In fact, the idea of state-run currencies under central bank control is the new kid on the block. It's only been around for about 70 or 80 years now. Still an experiment in progress, one that many observers would call a failed experiment, that is quickly reaching and showing the limits of that power as more and more stimulus through QE has derived fewer and fewer returns, and we're now reaching a point where the real economy, the stagnant, collapsing, financialized, fake Ponzi casino economy, is going to rear its ugly head and bite us in the butt, because unless it's supported by 0% interest rate, there really isn't the yield and productivity to keep that house of cards floating. To mix all of my metaphors there. But this is a relatively new idea. Our founding fathers themselves were involved in many currency experiments across all of the states. In fact, Benjamin Franklin's second job, if you like, other than being a founding father, was essentially printing currency and minting coins. So, and not just state currency. There was no state currency. There were multiple currencies owned by the states, owned by corporations, owned by various communities and cities and municipalities, as well as eventually by the federal government. So this idea that there's only one currency, it's a monopoly, and it's managed by the federal government, that's a relatively new idea. We are, in some ways, returning to a more pluralistic system, to the roots of currency. Currency as expressed by communities of interest, rather than this monopoly of currency by a single state, which has been used to abuse the financial system. Let's look at the idea of administrative and regulatory interference. There's two reasons why that will not work. One is that it's not really in the interest of the big banks to fight Bitcoin. It might be in the interest of some big banks to fight Bitcoin for a short period of time, but in the longer run, we're going to see many of the banks peeling off from that herd, essentially trying to use Bitcoin for their own internal purposes and use other digital cryptocurrencies to cut out many of the intermediaries who exist in the financial services industry, who are extracting enormous profits for very little productivity.
Western Union?
No, I'm thinking more, these are the inside boys that play with the banks, the Depository Trust Corporation in downtown Manhattan that does all of the clearing of equities, that acts as central clearinghouse for equities. SWIFT, the Worldwide Society for Interbank Fund Transfer, the Wire Transfer, International Wire Transfer Service. These are companies that exert undue influence over the entire global economy and extract profits for providing an inefficient, corrupt, centralized, and unnecessary service that could be replaced by a public ledger type digital cryptocurrency. And the banks understand. They understand that there's no reason to pay the middleman. These currencies, these digital cryptocurrencies like the internet, are ushering a wave of disintermediation. And while a lot of the consumers want to disintermediate the banks, and that may be threatening to some banks, the banks themselves want to disintermediate their own intermediaries, and they can see both sides of this particular currency system. I think we're going to see, just like the early days of the internet, when the large telecommunication companies were threatened, it threatened their long-distance profits, it threatened their control over media, it threatened the entertainment companies. Well, some of them figured that they could actually take advantage of this and use it to disrupt incumbents, broke from the herd, and eventually we see that wave won, and yes, long-distance profits got disintermediated, but AT&T is now the largest ISP on the planet. So they saw that it was better to play along than to try to fight that particular wave. I think the same thing happens with digital cryptocurrencies.
Yes or no? Is there anything that can stop Bitcoin or a sister or a cousin or a brother of Bitcoin gaining this acceptance that you see in the future? Is there anything that can really stop it?
Well, I'll answer that in two ways. Bitcoin itself can certainly falter. It can have various market effects that can lead to a collapse in confidence. After all, these markets are driven primarily by sentiment more than anything else. And there may be bugs in the technology that we don't know about that may cause confidence problems. The overall concept of a decentralized cryptocurrency based on distributed proof of work algorithm and this public ledger system, that technology is here to stay. And in whatever incarnation it exists, it will exist. It will continue to thrive. It will displace many existing industries and institutions. It will influence and impact world financial services in a dramatic fashion over the next couple of decades. It's also going to impact governance, corporation, cross-border trade, and central banks. Whether that will happen primarily in the US, probably not. I think it will happen where the need is most, and that is in the developing world, where 2.5 billion people have no access to banking, and close to 6 billion people have very limited, controlled, and restricted access to local banking only, without any international capabilities. These cryptocurrencies break down the borders, remove the intermediaries, create efficient and fluid transactional environments, and they work. And just because of that, they're not only going to succeed, but they're going to thrive and disrupt many of the institutions that we've come to know. The new era has already started. It's just a matter of understanding how different companies, different nations, different governments, different central banks will position themselves vis-a-vis this wave of disruptive change.
You know, as I was listening to you on Rogan's show, I was thinking about, as you were talking about the third world acceptance, and perhaps the third world being the first and best market for these types of situations, their acceptance could invariably be the driver that pushes the first world. I mean, if the third world jumps in with both feet and says, wow, this is great for us, eventually the first world's got to come into play.
The second world is going to jump in before the third world, and what I mean by that is that there are different criteria that are required, or prerequisites, if you like, to adoption of a decentralized cryptocurrency. You need a modicum of infrastructure. You need electricity. You need telecommunications infrastructure, at least the ability to do text messaging and widespread use of mobile phones. Even better, the existence of smartphones and basic data services that are not too expensive. You need financial literacy. You need language literacy and numeracy. Now, there are countries where these things exist already. Then, on the other hand, you need pressures for adoption. Pressures for adoption include corrupt governments, corrupt central banks, corrupt banks, collapsing currencies, hyperinflation, currency controls, stagnant local economies, demand for expatriation of funds, as well as immigrant workers doing remittances at very high costs. Now, if you combine those two things, positive factors pushing for the currency, as well as constraints on the economy, creating need for alternative options, you see that certain countries will fall right in the sweet spot of that spectrum. I'm thinking Argentina, Indonesia, the Philippines, many countries in Southeast Asia, Sri Lanka, Bangladesh, India, Pakistan, Malaysia, Vietnam, Thailand, Singapore, and then also perhaps large parts of China and many of the former Russian republics. You know, these countries are going to move faster because they already have a lot of the infrastructure they need. They have numerate literate populations, and they have tremendous need because the government and the bank in many of these countries cannot easily be distinguished from an organized crime syndicate. They operate like one. They have an impact on the economy by trying to take a cut of every cross-border transaction, every remittance that comes in, and every deal that happens in the country. And so people need alternatives. I would see those countries jumping on first. You know, you're not going to see this in the, rural parts of Sudan or the Congo or anything like that, but you might see it in Lagos, Nigeria, and South Africa, in Manila, and places like that much faster.
Let me follow up on an issue that I saw in your prior interview, and I didn't catch the specifics of the answer. Fees. You've talked about how awesome, and once again, I'm concurring here. I'm just playing devil's advocate to let you drill deep.
Sure.
But, if I'm in Southeast Asia tonight and I want to buy something, and boom, it's as simple as sending an email, and I can send cash. and assuming the right app on each side, boom, the other person receives it almost instantly. And I saw you keep saying, except for some small fees. Can you explain the fee aspect? Where is the fee going? Who's taking the fee? How is it not just everything is going to the person that you want to receive the money?
There's a cost to securing the network, and that function of securing the network is called mining. It's also the function that generates new forms of currency in a cryptocurrency. So currency issuance, which is printing money, if you like, one of the Fed's functions, is handled by an algorithm, and it's handled by participants in the network that compete to solve a very hard problem. This competition is rewarded by issuance of new currency, but it serves another purpose. It's not about issuing the new currency. It's really about securing the network. The right to record transactions on the public ledger, the right to say this transaction actually happened and we all agree it happened, is given in turns to those who win the competition for resources in this mining competition. And there's some math behind it, but essentially, through this competition, the network is secured. Those who participate in this mining function, called miners, receive two forms of reward. One is new coins that are issued as part of this function, and the other is fees from the transactions. So every transaction you do may or may not include a small fee, and that fee is payable and collected by the miners. And that transaction is recorded in the public ledger. At the same time, that fee is collected by the miner who mined that transaction into a block of transactions. Now, the fees depend on a number of factors. Here's the interesting part. Unlike most financial networks where the fees are proportional to the amount of money you're sending, on Bitcoin, the fees are proportional to the amount of data the transaction consumes. So you count how many bytes or kilobytes the transaction consumes. Also, if you try to move money that has recently been moved, it's more expensive than if you try to move money that has been sitting around for a while. So after a while, coins that have been simply sitting in an account do not take any fees to move. You can move them without paying fees. Those are essentially free transactions. So old and large coins are prioritized as free transactions. Coins that have recently been moved and need to be moved again, depending on how big the transaction is, which has to do with how many little chunks of coins you're putting together in order to make a payment, that will carry a fee that at minimum is about 1/10,000th of a Bitcoin. So in today's prices, the minimum fee would be 0.1 millibits, or a third of a cent, a third of a penny in US dollars. And it doesn't matter how much money you're moving. So if I created a minimum fee transaction that was less than a kilobyte in size, relatively new coins, I had $1 billion in it, I would pay a third of a penny to move that. If the transaction had a lot of inputs because it was consisted of a lot of loose change, small payments, I might pay, 2 or 3 or 4 pennies, maybe up to 10 pennies to send a pretty large transaction. So 10 cents. And again, this has nothing to do with how much money there is in that. If you wait 2 or 3 days or up to a week before sending the money, then it will fall into the category of being a free transaction, and then you won't pay a fee at all.
Let me interject here. So what I like about the explanation you just gave is I've listened to explanations on mining before, and I'm not a dumb guy, but I listen to these explanations on mining from just an assortment of people, and even including yourself, and my eyes glaze over. But the way you just described it, and I kind of walked myself in a way where I wasn't expecting that answer, the way that I just think I understood it, and I hope I don't put my foot in my mouth, is it almost sounds like enable the programmers, the gentleman that wrote this concept down, in order for it to operate, that there's going to have to be some human involvement. And so it almost sounds like what you described mining to me is like a paid Wikipedia staff.
It is a paid function, absolutely, but it's a highly competitive market. One of the interesting things about mining is that it is it's almost independent of the Bitcoin economy. So there's a competition going on, and that competition involves crunching numbers with specialized computers that use a lot of electricity to do billions and billions of calculations per second. And altogether, the network is, some 200 petahashes per second. What that means is 200 quadrillion hash operations per second. And based on that level of computation, it takes 10 minutes for someone to find a solution to this problem and to basically create another block of transactions and roll the public ledger forward by a number of transactions. 200 quadrillion operations per second over 10 minutes is the amount of computation needed to prove that the transactions are valid. And the person or system or co-op, if you like, because there's also cooperatives or pools, just like a lottery pool. The co-op or person who finds the solution gets a reward. Now, what's interesting about this is dynamically adjusts. So if more people are trying to solve the problem gets harder. If fewer people are trying to solve the problem or less computing is being used, the problem gets easier. That's a unique feature in Bitcoin because it means that the difficulty of the mining function has nothing to do with how many transactions are in the network or how much money is being sent to the network. It simply has to do with how many other people are trying. It automatically adjusts to reach a specific target, and that's to create new blocks every 10 minutes. So no matter how many people are trying, it'll always be as hard for that number of computers or that amount of computation to find a solution every 10 minutes. It automatically adjusts back to 10 minutes.
Let me jump to a couple last issues I want to broach with you. So the big picture of Bitcoin, look, it's a system of electronic currency not relying on trust. Big picture, that's what's going on. But to say that statement, my thought comes, and I saw you talking about this issue on Joe Rogan's show, is privacy. And I'm not asking the question from the standpoint of, look, I'm a U.S. resident. Uncle Sam has me. We've got to pay our taxes, all that kind of stuff where they make your life a living hell. But I sure would like to know what the privacy angle is with Bitcoin. Like, is someone going to know? Because clearly someone knows, or somebody can figure out really quickly how many dollars we all have or dollars we control. But Bitcoin doesn't have that type of oversight, does it?
Let's do this a quick comparison. I think most Americans are blissfully oblivious to the fact that their financial transactions are by far the most surveilled part of their life. Where we talk about, for example, the NSA having access to telephone recordings and metadata on calls, and under the Patriot Act 215 section being able to retrieve phone recordings, emails, and, with PRISM, look at metadata, Facebook, Yahoo, things like that. What most people don't realize is that Section 215 of the Patriot Act gives full access to not just the NSA, but the FBI, and even local police departments with a modicum of due process, just writing a national security letter, which you can do with a gag order that doesn't allow the provider to say anything, to collect vast reams of financial data. Effectively, that information is being piped to a multitude of agencies and fusion centers that can track every penny you spend, every balance on every account, every transaction, every credit card, every payment, every PayPal transaction you do, and keep track of that forever across all of your financial activity. Most people don't realize how revealing that data is. Really, they don't need to listen to our phone calls. They can just see where we're spending our money, and they have a very full picture of that, which is, as far as they would like to say or claim, outside the purview of the Fourth Amendment. Constitutional civil libertarians like myself consider that
it's all a bunch of bullshit. Let's agree. It's a surveillance state. It's absolutely nonsensical. And the fact that they do it to people that aren't risks in any way, shape, or form is overreaching, heavy-handed crap. So we're on the same page.
None of this requires probable cause. None of this even requires reasonable suspicion. This is vacuum, wholesale, totalitarian surveillance of our financial lives.
Yeah.
And this happens on a daily basis. Now, let's compare this, and I think that's wrong. I think it's not only wrong, it's dangerous on two levels. It's dangerous on the personal level because all of this private information floating around in all of these fusion centers we've seen has already been used by people inside these things to stalk ex-wives and spouses, to harass and stalk people. But also, who's not to say that other agencies have broken into these systems and extracted that information, employees in these things have stolen this information, or that it leaks somehow. The more it's collected and the more places it's collected, the easier it is to lose. And the second part is it's dangerous on a societal level. When you give that much power to someone, they will abuse it, and when they do abuse it, they will have enormous political power over our lives, and that is a very dangerous thing for democracy. Essentially, democracy withers in such an environment. Moving on, Bitcoin. Bitcoin has a public ledger. That means every transaction is visible to everyone. However, what you see in a transaction is the source address, a destination address, and an amount. And that source and destination address is a Bitcoin address, which is a long string of numbers and letters. And any user can have as many Bitcoin addresses as they want. In fact, standard practice or best practice in the Bitcoin space is to use a new address for every transaction you do, and many wallets do this automatically. So every time I do a transaction, I use a new address, I receive change to another new address, and then from there I do my next transaction to a new address, and so on and so forth. And the recipient of these payments will also be using a new address. It's fairly difficult to figure out exactly who is associated with each address based on that basic level of, if you like, recycling of addresses. But if you do enough statistical analysis, or if you have a tap or a way to record one side of the conversation and temporarily assign an identity to one of these addresses, then from there you can associate the other addresses back to that identity, and using statistical analysis you can track to some degree where those transactions are happening.
So there's no privacy.
Well, no, not necessarily. So Bitcoin is, I would say, the most benign of cryptocurrencies when it comes to privacy and anonymity. I think it's important to note that if governments do move in a direction that surveils Bitcoin heavily and requires disclosure of identities, etc., all they're going to do is they're going to push the entire ecosystem to become much, much stealthier. We saw that with the evolution from Napster to BitTorrent. Regulatory pressure creates evolutionary development in open source software to resist and bypass that pressure. That's exactly what's going to happen. Now, in the meantime, those who try harder can add additional privacy. So with Bitcoin, it's easier to do radical transparency, which is very useful, for example, for a charity or non-governmental organization or even a government department that wants to provide auditability and accountability of its financial transaction. They can publish addresses, and then anyone in the world can audit exactly what they're spending and where they're spending it, and that's a great feature. Going to the other end, which is radical anonymity, is quite a bit harder, but it can be done to a very successful level, if you want. And that involves not just reusing addresses, but also doing various transaction blending. Essentially what you do there is using servers out there on the internet, you will find other people who want to do transactions. Say you have 10 people who want to spend a Bitcoin each on 10 different payments. They can all join into one transaction that takes 1 Bitcoin from each of them and then sends 1 Bitcoin to each of the payees. And when they see that their desired payee is being paid, they each sign that transaction and it gets executed. Now you have 10 inputs, 10 outputs. It's hard to see who's paying who. And if you do that on a large enough scale, you mess up the statistical analysis. together with reusing addresses. And there are other even more radical ways of preserving privacy, and it can be used for radical anonymity.
There's nothing radical about it. I mean, I think as a natural outgrowth of just being human beings, I mean, you look at it right now, people can snoop on your phone and see you've got a naked picture, this or that. I mean, the reality is all of us do not want the state to know what our assets are. And if there was an option given to every last person in any kind of civilized society where the state does not have purview of what your net worth is, we would all say, yes, I want that. I want that chicken dinner, winner, chicken dinner. That's what I want. So there's nothing radical about it. I think it's fantastic. So here's the follow-up question to that, though, is from look, right now, obviously people can log into our checking accounts, our brokerage accounts, our credit card statements, and they can see what the balances are. Is there a way, as one starts to accumulate Bitcoin, is there a way that those balances can be reviewed? We're talking about the transactional aspect of figuring out who's who, but what about if you have a large balance of Bitcoin?
Again, not really, because in Bitcoin there are no accounts. Essentially, you accumulate balances in different addresses, and if you use a different address for every transaction, then you don't really have one balance in one account. You have 1,000 balances spread over 1,000 addresses. Only if someone knows that all of those addresses belong to the same person, which you can only approximate to a statistical accuracy level if you monitor everything and do statistical analysis and connect identity to one of those addresses and then taint all the other addresses. It's not easy. So no, you can't. I'd like to go one step further, though, and talk a bit about, the idea that financial privacy is something that only radicals or extremists would want, is a very comfortable idea to have in a relatively still democratic and constitutional environment like the United States. The problem is that in the vast majority of the world, there are some very nasty people in government who have extremely oppressive policies towards their populations. And in those countries, freedom of association doesn't exist, and spending funds for political donations, for example, certain groups, lands you in jail and being tortured by the government. Financial privacy, which seems like a luxury to Americans, is not a luxury. It's a basic survival need in many, many parts of the world. So before we start kind of condemning the ideas of financial privacy and saying, well, we need to give the government access to every single financial transactions we do so they can keep us safe from the bad people. Well, it turns out the bad people are running the big banks, at least some of them are, and the government doesn't do a very good job of keeping us safe from the bad people. What they do is they keep us safe from our own money, and they accumulate power onto themselves. And if you do give them that power in other countries, they're going to use that to keep people safe from freedom. They're going to use people to keep them from ever achieving any form of personal liberty or social liberty. And so I think it's a very elitist attitude to say privacy doesn't matter. Well, you're in a very privileged position if you think privacy doesn't matter, because for the rest of the world, it really, really does matter. And Bitcoin is a global environment. We need to consider how these things will affect the rest of the world, especially since trying to stop financial privacy on Bitcoin will not be effective. What it will do is it will simply drive more and more development of stealthiness, as it should, and people will regain the financial privacy they need.
I'll add something, many of those state operators that might say they're doing something for the good of society or to help the common man. I mean, really the only person they're helping is to keep the cushy job they have. It's all about protecting, to sit in that chair of power and to lord over the subjects and to get that steady paycheck that allows them to buy high priced land in Northern Virginia, suburban Maryland, and Washington, D.C. area. But that's an entirely different subject. I have one or two questions. Currency volatility.
Yes.
And feel free to make a comparison to many currencies around the world. People might look at Bitcoin and hear some of the numbers and they might say, well, gosh, that sounds really volatile. Why don't you talk about the volatility of Bitcoin currently and compare it to some of the other currencies that are established currencies around the world?
No, Bitcoin is really volatile, and people should be extremely cautious, especially when it comes to investing in Bitcoin. Bitcoin is not an investment. It can be part of an investment strategy for sophisticated investors who understand high volatility environments and can use that as part of a broad, diversified portfolio of investments and have the appetite for the risk. But you do not go into Bitcoin and start treating it like a day trader, because it behaves like a very misbehaving penny stock at the moment. And the reason for that is really simple. You've got a global currency that is exposed to the vagaries and political pressures and geopolitical changes and risks of the entire globe, while at the same time having a liquidity pool that is less than $5-6 billion. And that makes for a puny little currency. If the US dollar is a giant cruise ship and is steady in the water and the various waves don't move it around a lot, Bitcoin is like a zodiac bouncing up and down on the waves. Now, if you understand the macroeconomic picture, you can tell that the cruise ship is actually the Titanic and is gradually sinking. Very, very slowly, very, very stably sinking. And so some of us would rather be on the little zodiac. It may be bouncy, but it's not sinking.
Yeah.
But, Bitcoin will be volatile, and it will be volatile for quite a while until it reaches liquidity levels that can absorb these pressures and stresses and be able to respond with less movement in the currency. It will be volatile. That's not a characteristic of instability, though. There's a difference between volatility and stability. The dollar is not volatile at all. It has been on a very, very, very steady downward inflationary trend towards worthlessness for the last 80 years, and it is continuing on that downward trend very steadily and very slowly. So volatility in itself is not instability. But it will be volatile. Don't treat it as a day trading investment. Be frugal with your investments into Bitcoin. Use it as a currency. You can convert into and out of Bitcoin in short periods of time and not expose yourself to currency fluctuations. You can buy and sell it for US dollars, make your transaction in Bitcoin, and then get out of Bitcoin. Or you can keep a small amount of Bitcoin as part of your portfolio.
Okay, one last tiny question. Give my audience where they can go find more information on you, follow you, see what you have to say, because clearly you've got some really nice insights here. And I mean, I learn a lot. I've learned a lot. I watched several hours of you today, and now I'm listening to another hour of you. So I'm enjoying just this whole learning process. So tell people where they can go to find out more about you, but also, can you give people a good place to go to where they can get started? Even if they don't even have any Bitcoin yet, if they don't have the app on their phone yet, where can people go to get started? Because there's still some technical hurdles here that don't make this so easy. It kind of reminds me of people said years back, hey, use PGP on email. It's still not as user-friendly as one might like.
Bitcoin.org is the place to visit. It's a community site that has information on how to get Bitcoin, how to load the software on various devices, what kind of software to get, and you can learn more. There's also a wiki there that has information about Bitcoin. You can find a lot of information about Bitcoin by watching some of the videos that are available. If you search for Bitcoin on YouTube, you'll find tons of stuff. Some of it is stuff that I've done. If you do a search for Antonopoulos and Bitcoin, you'll find a lot of stuff there too.
Hey, listen, don't stop. I can tell you're passionately obsessive, and I think you are correctly, you don't need me to tell you this, but I think you are correctly at the front end of a wave, and neither of us can predict when this is going to break. I'm gathering you're a younger guy, and you got plenty of time ahead of you. But I think I'd stick close to this passion and obsession that you have, because I think you're right. I think this really has the power to change just about everything. Because God, if we can get the state out of manipulating currency, and that's all it is right now, if we just get the state out of that, oh man, I think it'd make a much nicer life for just about everybody on this planet.
Yeah, well, the founding fathers got it right when it came to separation of church and state, but they missed the separation of money and state, and now we can do it.
Yeah. Hey, listen, thank you for taking the time today, and hopefully we can talk again in the future.
Thank you so much, Michael.
Now for my second conversation with Harry Yeh. Let me jump right into the operative, controversial, inflammatory, not good news for you point, which is basically, roughly, Bitcoin has seen the around 200 price point in the fall of 2013, gets up to close to 1200 and is back to around 200. That alone looks a lot like one of those damn .com bubble curves, doesn't it?
Yeah, I mean, it's interesting to take a look at Bitcoin. I mean, if you look at the history of Bitcoin, 6 years ago, it was worth nothing, right? And then I think around 2010 or 2011, it actually became par with the US dollar. And then 2011, I think the middle of 2011, it went up to $10. And then 2012, I think towards the end, it kind of hit around $60. And then, 2013 went from 60 to 260 all the way back down to 60. And then at the end of 2013, went all the way up to 1300. And then, the last year, it's definitely starting to go a little bit more mainstream. It's kind of pulled back to around 155, and then now it's back up to 225. So it is definitely a trader's dream, I can tell you, because it's the most volatile alternative asset class out there by far. There's nothing else quite like it.
When did you first have your first Bitcoin? When did that happen?
Yeah, so it was, I'll go back into a little bit of the story about the history of Bitcoin. Actually, I got into Bitcoin relatively late because Bitcoin was founded in about 2008 by Satoshi Nakamoto. And I got in probably around middle of 2013. The first time I actually heard about it was on Facebook. I saw one of my friends post, Bitcoin's at $60. And this was at the beginning of 2013. I was like, what on earth is a Bitcoin? And then I started, Googling and researching it. And then at first I learned about this mining piece, which I'll talk about a little bit, where it essentially runs a program on your computer and it uses the computational resources to do what's called mining. So you're basically using your computer to solve these hashing algorithms, which basically is the equivalent of generating like a lottery ticket. And if your hash matches, the block of transactions, you get rewarded, 25 Bitcoins every 10 minutes. So I thought that was kind of a crazy thing at first, but I just heard a lot of news about it. So then I put it on my to-do list, and this was when I was running a couple of other startups. And then finally, I just didn't really pay much attention to it. And then I heard about this big spike. And then I hear about how, Bitcoin is really bad for electricity and the environment because all this electricity is being spent on Bitcoin mining. So there just wasn't a lot of good news about it. And then, then I had another friend who actually posted on Facebook, I think in May, and then there was a picture, and I'll send you this picture later, is all of these Bitcoin mining machines. And then I said to him, oh my God, are you into that Bitcoin thing? It's such a scam. You're never going to make any money. And he says, I made $10,000 last month. And then all of a sudden I was like, what? So it went from the bottom of my priority list to kind of like the top of the list. I was like, wow, he actually made real money these last couple months. And then I decided, I was going to get into the mining. So I bought an actual miner. The first miner I bought, I think, was called an Avalon ASIC. And this thing would actually generate about 3 Bitcoins a day back in 2013. So I really, really kind of did it because I really wanted to see how the technology worked. And at the same time, my friend also sent me my first Bitcoin. And then when I saw how it actually worked, that's when the light kind of went off in my head. And I was like, wow, this is going to be a really disruptive piece of technology.
But the problem with this, though, is for those people that are listening, they're like, oh my gosh, Harry knows what he's talking about, but I just want to use the damn thing to buy and sell stuff. I just want an alternative currency. And what you just described sounds like a PhD program in mathematics that I have to go attend.
Yeah, so, I come from an engineering background, so Bitcoin is definitely a lot easier to understand now. When people ask me what Bitcoin is, like what's the shortest definition, I tell them that it's a protocol for transferring and storing value. That's like the most eloquent way that I can describe Bitcoin. But the reality is Bitcoin is the best way to think about it is it's not just a currency or a commodity. It's probably, if you take cash on one side and gold on the other side, Bitcoin kind of sits right in the middle. And that's kind of how I like to describe it. So if you take a look at like the US dollar, it's inflationary because the US government can keep printing unlimited amounts of it. Whereas gold, it's not unlimited. There's a finite amount of supply, and it takes a lot of energy and effort and resources to get it out of the ground. So Bitcoin is kind of in between because Bitcoin is deflationary like gold, but it doesn't have all the weight like gold. And there's also not a infinite supply. There's only 21 million Bitcoins that will ever be in existence, and 13 million of them are already out there in circulation. So that's probably And then Bitcoin also has the liquidity of cash. You know, it's pretty easy to convert Bitcoins to cash and vice versa. And you can move and send money anywhere in the world in under 5 minutes without using SWIFT. The only problem with Bitcoin right now is there's a lot of volatility risk. So we actually see that going away in the future when instruments such as derivatives, hedging, and futures markets become a bit more mature. So that's really kind of where the exciting opportunity is right now. It's
let me interject there, because I think you make a good point that when you look at the chart clearly doesn't say, hey, this is a stable currency for a store of value.
It's not a stable currency at all. I mean, I don't use it as a currency at all. I've used it as a currency really just kind of more for fun. So for example, the first people actually joke with me like, Harry, you know, you trade such large amounts of Bitcoin, but you never buy anything with it. I'm like, no, I mean, we speculate on the price of Bitcoin. You know, I mean, our main business is we facilitate large block trades for high net worth clients and institutions. So if a fund or a family office wants to buy $5 million worth of Bitcoin, we actually help them do that without moving the market. But when I went into a store to try to buy like a toothbrush or try to buy actually this is the first time I tried to actually spend Bitcoin I was actually down in Miami, and I was in Fort Lauderdale, or no, was it Fort Lauderdale? It was Tampa for the BitPay Bowl, and I was trying to buy ice cream with it, but then my mobile wallet didn't actually work. So I actually had trouble spending Bitcoin. It was a bit more difficult, but then some of my friends from Airbits and BitPay helped me get my wallet set up. So actually, the first thing I bought was some champagne with it.
Somebody sent me a Bitcoin ATM machine pic from Singapore, so I guess there is some of that.
Yeah, I mean, it's very easy to get Bitcoin, and it's very, very easy to exchange Bitcoin out into cash and vice versa. I mean, the market's definitely a lot more mature now. There's a lot more on-ramps and off-ramps. So on-ramps would be, for example, like an ATM. You go to an ATM, a Bitcoin ATM, then you put, cash in, and then you get Bitcoin. And then if you go to, let's just say, a store that takes payment processing, kind of like a place that accepts Visa, MasterCard, and let's just say they sign up with a merchant like BitPay or GoCoin or Coinbase, then you can actually just send your QR code, and, that's like the off-ramp. So there's good on-ramps and off-ramps being built right now for Bitcoin. So there's definitely like an ecosystem built around moving money around right now.
You say it's a split between commodity and currency right now.
Yes.
But ultimately, for this to be successful, for the idea of Bitcoin to be successful where we all use it, it's really got to go all currency, doesn't it?
I don't know. I mean, it's not that I don't know. I think it's kind of one of those things where the velocity of Bitcoin, people argue that the value of what gives Bitcoin value is that people will actually use it as a currency. But I think people are also more excited about Bitcoin when the value of Bitcoin goes up. So it's, you typically don't want currencies to appreciate or depreciate. You want currencies to be relatively stable, right? Bitcoin just happens to be one of those assets and currencies. It's kind of like a hybrid. It does both. So that's what I actually tell people. I mean, most people that buy Bitcoin, they don't want to spend it because they think it's going to go up in value. Well, if you don't spend it, you basically qualify in that group of what's called hoarders, like people. But
isn't that a short term, like, early adopter type thinking? And for Bitcoin actually, I mean, as I imagine it, because I want to use it, I'd rather, if I could have a significant amount of my assets stored in an alternative currency that has some stability, why not? We'd all want to do that, right?
But I think if you want stability, you might buy the US dollar, because that's typically what we store our money in, is like US dollar. So our fund is actually a US dollar based fund. I mean, we're huge fans of Bitcoin, but we trade Bitcoin because we're speculators and we believe the value of Bitcoin is going to go up. It goes up and it goes down. So it definitely has.
Okay, so now I think I've got a better handle. So I've talked to some other folks about Bitcoin. You look at it, and I would love for you to explain this too, because you sound like you're describing almost a market making situation, discussing placing large block trades for high net worth people that don't want to move the market.
Yes.
You really are not, if I'm reading you right, you're not really saying, hey, I know this is going to be the future of currencies and privacy, et cetera, et cetera. You're just saying from a pure, hey man, I'm a speculator and we can make a lot of money with this, and that's what motivates me.
Yes, and that's actually why our fund is actually a US dollar based fund. But I mean, we believe in the long-term viability of Bitcoin, but short term, we're speculators of Bitcoin. I mean, we do hold Bitcoin long term, but our goal for our fund is to return USD to our investors, right? It's not to accumulate more Bitcoin. I mean, we'll accumulate more Bitcoin if it's worth more money, but if Bitcoin goes to zero, it's not going to be beneficial for us.
Now, you guys have, I've seen you quoted as talking about you're interested in to start trading Bitcoin as futures contracts. Now, that opens up, based on my limited knowledge, that opens up a Pandora's box. So I'm curious if you might discuss the notion of regulation right now. I mean, have the U.S. authorities, I mean, you start talking futures contracts, clearly there's a mechanism, a protocol, a system that's worked in the U.S. for a long time and around the world. So does that bring you into that, to their purview, the CFTC's purview, when you start talking futures contracts?
Absolutely. There's already two exchanges in the United States. One's called Ledger X. The other one is Terra Exchange. I think Terra Exchange, they're already like regulated by the CFTC, and they're already doing like OTC futures contracts, but for much larger blocks. So it's not even a question of when it's going to happen. It's already happening. But just right now, the futures markets in Bitcoin, there's really two futures markets. The futures markets that are Bitcoin denominated are not regulated. And they're more for like gamblers. So for example, like 796.com, OKCoin, Huobi, a lot of these China sites, with the exception of BitMEX, all of them provide like, 10 to 20x leverage, which is crazy if you're like, we don't even deploy that kind of leverage when we're, trading Bitcoin or futures. But I mean, it's a huge gambling market right now for BTC denominated futures.
Let me ask you the cultural question. So you mentioned to me that you've been doing quite a bit of travel to China. Culturally, is there an adoption or an interest in Bitcoin that you see in China that's different than other areas of the world? What's the fascination?
Actually, so you bring up an excellent point. So I definitely like to contrast China and the U.S. because those are definitely the two biggest markets for Bitcoin. Europe's also relatively big for Bitcoin, and I think the thing that's going to make Bitcoin even more popular in Europe is when you see the Greece, like a Greece collapse, or like they exit the euro, or something just happens with some country, kind of like Cyprus. That's the Europe situation that we see for Bitcoin, and same with South America. But if you're talking about China and the U.S., first thing I'd like to talk about is in China, like that the Chinese mentality actually for China. A lot of the Bitcoin there is just retail speculation. I mean, the retail investors in Asia tend to be a lot more savvy than, let's say, the retail investor in the United States or North America. For example,
explain why you say that.
Sure. So, you go to Hong Kong and you go to China, you will actually see the mom and pop shop, the person on the side of the street that's selling newspapers, or somebody that runs their own restaurants. They will have their own brokerage account and trade for themselves, and they'll research all the stocks. They'll do everything themselves, and they won't use a broker. And the same thing with Bitcoin. They'll just open up an exchange and buy it themselves versus like going through somebody else. Whereas in the United States, most people would just rather pay for service. So they'll use a simple service like Coinbase, where, they'll happily pay a 1% for convenience and service, and they don't have to sign up with like an exchange like Bitstamp or OKCoin or all of these other things. Like in the US, it's a real hassle to try to buy Bitcoin. So most people I talk to, they don't even want to deal with exchanges. Whereas in China, almost every single person likes buying and selling on exchanges. So that's probably like the first big contrast that I see. That's why you see such huge volumes in China. Is first off, there's like 1.3 billion people in China. Some of these exchanges have over like 1 million to 2 million accounts with like, 200 to 300,000 active users, which is huge compared to, the United States, where you might have a site that has 1 million people that have signed up, but you might have like 30 or 40,000 active on any given day. So it's very, very different than the mentality of investing in Asia versus the North America. So that's the first part. That's why you see so much more volume of Bitcoin in China. And China typically leads the way for pricing, is because people speculate really, really hardcore in China. They just love to gamble.
Yeah. Well, you bring up a great point. My first time I was in Macau, I remember walking into the floor of the Venetian casino. And, it's different than walking into a floor of a U.S. casino. First off, the Venetian Casino in Macau is massive, but to see that floor and culturally see there's a much more seriousness, there's a much more quiet, it's very intense. Why don't you talk about the notion of, because right now, and you've already established this from your perspective, Bitcoin is tough as a store of value right now. So you're kind of saying, hey, as a trading opportunity, this is great. Why don't you combine that though too with what I think most people and even the Chinese themselves would say, we love gambling and Bitcoin fits perfectly with us?
Sure. So actually, going back to your Venetian point, I actually completely agree with you. And it's funny you actually bring that example up because, when you talk about the Venetian in Vegas, they build it all up and it's really, really nice. They try to create this amazing experience. They're shopping. And then I think the gambling floor in Vegas might be around 40%. The rest of it is like hotel, shopping, et cetera, right? When you go to Macau, it's like 90% baccarat. The shopping area is literally about a 5-minute walk. And the rest of it, it's just hardcore gambling. So you picked like the perfect example. Like it's just a huge contrast. Like, I mean, over there, they just care about making money. And, over in the States, it's more of an experience, like with the casinos. Bitcoin's the equivalent of digital cash. If I send you 1 Bitcoin, actually, you know what I'll do after this talk? I'll send you some Bitcoin. You don't have any Bitcoin, right?
That's one of the questions I want to ask today is, seeing the headlines, where the F do I start? Like, give us Bitcoin for dummies at some point, Harry. Come on now. You're just telling us about all the millions of Bitcoins you're trading and all the money you're making, but why do you got to tell the rest of us how to use the damn thing, huh?
Well, I think once you see how it actually works, a light bulb will pop in your head. So what I'll do is I'll get you to set up a wallet either at BitGo, which is like the best multi-sig enterprise security wallet. That's for your computer. And then if you want a mobile wallet, the one I would recommend is called Airbitz, AIRBITZ, or Z if you're American, because I'm Canadian. And those are kind of the 2 wallets that, we recommend. One is more for consumer purchases. The other one is for storing large amounts.
Where is the best place for people to go to check you out, Harry? Where can they go? They can find you. I was doing some Google News searches. You seem to be all over the map with some, getting thoughts out there about, Bitcoin to the press, but where else can people find you?
There's not really that much information about me out there. I mean, there's some mentions of us like in the Wall Street Journal and Forbes and CoinDesk, a lot of these publications.
Well, you turn me on to a different way to think about this. And I think it's the fact that there's so many people interested in Bitcoin and with all this price volatility, there's some true believers that I've talked to that want to talk about all the legal and the blockchain and this and that. And you're just saying, Mike, you know what? I'm a speculator and boy, this is exciting.
But I was always into trading. So I guess a lot of my friends that just happened to be VCs, they saw me trading Apple options, stocks. They knew that I was really, really into trading. And then when I got into Bitcoin, I was just sitting in their living room at around 3 a.m. and they were like, what are you doing? I'm like, oh, I'm trading Bitcoin. And they're like, you know what? We've been wanting to make a bet in the cryptocurrency space. Why don't we just start a fund? We know it's something that you've always wanted to do. And I'm like, oh, wow, that's great. Yeah, I'd love to. So this is kind of how I got into it is because Bitcoin is it's not from the financial world per se, but it's the single biggest disruptive thing to happen, I think, since the internet and to financial technology, because it's the first time that you're actually taking a lot of the power of transferring value away from the banks and from the central governments, from the central banks. So I think it's important, like why a lot of people are pro Bitcoin is because I like to call a spade a spade. Bitcoin really, really does allow you to do that. If I want to buy $1 million worth of Bitcoin, I can go anywhere in the world right now. I can exchange that right away for, $1 million, whatever US dollars somewhere else, right? Minus the volatility. So that's the first powerful thing about Bitcoin. That's why a lot of people are pro believers of Bitcoin is that, you can't seize people's Bitcoins unless you take their private keys on their computers, right? So if you know how to secure those private keys, nobody can ever take them from you. So it's like I can walk around with $1 million in my head and nobody can ever touch that. So that's the first thing I think people need to understand is that Bitcoin gives you a lot of power that you just, like if the banks want to seize your money or they go under and they want to stop you from withdrawing, that's it. You can't do it. But people cannot do that with Bitcoin. It's your money. That's why, like, even with the Silk Road, all these other things that people talk about, people use the US dollar to buy drugs. They use there's so many other things people actually do with the US dollar for money laundering. But Bitcoin tends to get a lot of the bad news and press about it just because it's so volatile and it's so new. So that's the first thing I think people need to understand about Bitcoin is that the media overplays a lot of the things about Bitcoin. You say, oh, Bitcoin got hacked. I mean, the reality is Bitcoin never got hacked. It's the exchanges that actually trade Bitcoin that get hacked. So there's a big difference. It would be the equivalent of saying like something like gold got hacked or the US dollar got hacked. So when somebody says Bitcoin got hacked, it's kind of an uneducated statement. That's the first thing I like to tell people.
Well, it's absolutely fascinating. And I had a guy on my show about a year and a half ago, I think, maybe not that long ago. And he was really a guy I've known for a long time. He was actually the very first investor with Richard Dennis and, been a CTA, et cetera, and a VC in San Francisco. And he came on my show and he said Bitcoin or some derivative of Bitcoin is going to be the single greatest investment in our lifetime, period.
Yeah, it's the only thing right now that could go potentially 100x. And one of the reasons I got so heavily into Bitcoin, and I'm betting everything on Bitcoin right now, like that's how much I believe in it. For two reasons. One is I actually believe in the value of Bitcoin. I believe it's got the potential to hit $10,000. Or it might go to zero, who knows. But one of my partners said to me, Harry, anytime somebody thinks that it's going to be very, very big, or it's not, it's going to be huge. The second thing that you actually mentioned was the blockchain technology. That's actually probably the single biggest innovation. So I know you mentioned the blockchain technology before, but that alone is probably the single biggest innovation in technology. Like the blockchain is essentially a distributed peer-to-peer forward read-only linked list, which means that it can't be corrupted. Because you know how a lot of firms can cook their books? Well, you can't cook the books with the blockchain because once it's written and it's confirmed, you can't go back and modify it unless you own a significant amount of the network. So I think accountability, you're going to start to see a lot of applications built on top of the blockchain. So a very, very exciting development from this company is called Blockstream. And they're basically building what's called side chains on top of blockchain. But that's a more technical discussion. But regardless, I think it's important to know that the single largest areas of investment right now in Silicon Valley are all going towards Bitcoin or like the blockchain type technologies. I mean, Coinbase just even this year, they raised around $75 million at the beginning of the year. So we're starting to see like venture investment is increasing for a lot of these companies, and technology already moves at a very, very fast pace. But in the Bitcoin world, it moves probably around 4 times the speed of normal technologies. So last year, we've seen companies that will raise 20 million at the beginning of the year, and then 6 months later, they'll raise another 20 million. So it's definitely the most exciting space in technology right now.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.